The global economy just experienced a jolt. President Trump announced a $400 billion trade deal with Vietnam, days before a major tariff deadline. This wasn't a minor policy tweak, it was a seismic event, averting chaos in global supply chains and reshaping $400 billion in trade flows. The deal pulled the world back from a harsh trade war, as the White House had threatened a crippling 46% tariff on all Vietnamese goods. Instead, the agreement cements tariffs as a permanent tool in U.S. trade policy, fundamentally changing how and where goods are made and sold. For years, companies fleeing China made Vietnam a manufacturing powerhouse, betting big on its stability. The deal imposes new costs but offers certainty, allowing businesses to plan, albeit for a pricier future. It's a pivotal moment for Trump's America First doctrine. Less about free trade, more about strategic control and rebalancing economic power. The shockwave isn't just about money, it's about the strategic aftershocks that will redefine global commerce for years to come. At the core of the deal is a new tariff structure that rewrites U.S.-Vietnam trade. The U.S. will impose a 20% tariff on Vietnamese imports, a relief from the threatened 46%, and a steep 40% tariff on goods transshipped through Vietnam, targeting Chinese companies trying to dodge tariffs. In return, Vietnam grants zero tariffs for all U.S. products, opening its market to American goods like SUVs and agricultural exports. This arrangement, tariffs on one side, open access on the other, reflects Trump's transactional approach. Previously, Vietnamese goods entered the U.S. cheaply, while American exports faced barriers, fueling a ballooning trade deficit. The New Deal tears up that playbook, replacing open trade with managed, government-controlled flows. The 20% tariff aims to generate revenue and push companies to diversify supply chains, while the 40% transshipment tariff doubles as a wall against China. For U.S. exporters, Vietnam's open market is a win, though smaller in scale. This is more than economics, it's trade policy as statecraft, using tariffs to achieve national goals. The message, tariffs are here to stay, and every trade relationship is now a negotiation. The U.S. is leveraging its market power to reshape global commerce. The world must adapt to a new era of managed trade. The Vietnam deal did more than set tariffs. It pulled global commerce back from the brink. As the U.S.-China trade war escalated, companies poured billions into Vietnam, making it a supply chain linchpin. The threat of a 46% tariff loomed, risking chaos for firms like Nike and Apple. The 20% tariff, while costly, is manageable and averts a catastrophic relocation of production. This stability is crucial. Shifting from China to Vietnam required massive investment and retraining. A sudden tariff spike would have stranded these investments and punished companies that diversified as the U.S. wanted. The deal offers a compromise, penalizing imports but not dismantling new supply chains. But the 40% transshipment tariff signals strict U.S. enforcement. Vietnam is no longer a tariff-free haven. Companies must now prove the origin of their goods. The cliff edge is gone, but the path forward is steeper and more complex. Every trade deal creates winners and losers, and this one is no exception. Vietnam's export sector is the clear winner, securing continued access to the U.S. market at a manageable tariff. For American consumers and importers, the 20% tariff means higher prices on everyday goods. Effectively, a new tax. U.S. exporters, especially in agriculture and manufacturing, gain zero tariff access to Vietnam's growing market, though the impact is modest. Multinational corporations avoid disaster but must adjust to slimmer margins. The deal is a strategic trade-off. Vietnam protects its factories, U.S. consumers pay more, and exporters get a new opportunity. The Trump administration prioritizes reducing the trade deficit and countering China over keeping prices low at home. It's not a win-win, it's a calculated redistribution of pain and gain. The numbers behind this deal are staggering. In 2024, the U.S. trade deficit with Vietnam hit $123.5 billion, with imports outpacing exports by more than 10 to 1. The new 20% tariff could generate up to $29 billion in annual tax revenue, a cost passed to U.S. importers and ultimately, consumers. This isn't just about balancing trade, it's a major revenue stream for the government. The explosive growth in U.S.-Vietnam trade was driven by companies fleeing China, making Vietnam systemically vital and vulnerable. Vietnam's economic ambitions hinged on export growth, A 46% tariff would have derailed its 8% GDP target for 2025. By negotiating down to 20%, Vietnam protects its growth, even if the path is now pricier. For the US, the deal is both a financial lever and a tool to reshape global supply chains. The numbers tell a story of risk, adaptation, and the high stakes of modern trade. Both countries have much to lose and much to gain from this new reality. The deal cements Vietnam's role in global commerce, but at a higher cost. The trade deal sent immediate ripples through financial markets. Wall Street breathed a sigh of relief. Major brands like Nike and Under Armour saw their stocks rise, relieved the 46% tariff was avoided. For these companies, a 20% tariff is a manageable cost, not a death sentence. In Vietnam, the deal is a lifeline, allowing the government to pursue its ambitious growth targets and keep factories humming. The agreement reassures foreign investors and preserves millions of jobs. In the US, the tariff will push up consumer prices, adding to inflation and giving the government a new revenue stream. The era of chasing the lowest labor costs is over. Companies must now factor in geopolitical risk and unpredictable tariffs. As one analyst put it, tariffs are likely to rise, not fall. Businesses must build more resilient, politically savvy supply chains. The deal marks a new normal trade policy, and geopolitics are now central to every corporate strategy. This deal is about more than economics. It's a move in the Indo-Pacific power game. The US is deepening ties with Vietnam to counter China's influence, preserving a key partnership in a critical region. Avoiding a trade war keeps Vietnam in the US orbit and allows continued cooperation on security issues. The deal balances America First economics with long-term strategic goals, showing the US can be tough but not destructive. For China, the deal is a setback. The 40% transshipment tariff targets Chinese firms, and the US-Vietnam partnership tightens the strategic net. Other countries are watching. This is a template for future US trade policy. Expect tough negotiations and tariffs as the new normal. Nations with large US trade surpluses are now on notice. The global economy is fragmenting into competing blocs, with trade policy as a key weapon. The US is signaling that every trade relationship is now a geopolitical calculation. The shadow of China looms over every deal. Despite the headlines, the Trump-Vietnam deal is shrouded in uncertainty. The full text hasn't been released, leaving businesses and governments guessing about key details. It's unclear which products face tariffs or how exemptions will work, making planning difficult. Enforcement is a major question. How will US authorities verify the true origin of complex products? The rules for proving origin are vague, creating headaches for manufacturers and the risk of delays at US ports. The deal is more a political handshake than a finalized pact. Many details remain to be negotiated. Ongoing talks and lobbying could reshape the final implementation. The deal's durability is also uncertain. Future administrations could revise or scrap it, making long-term planning risky. Companies must stay agile, ready for more changes in the turbulent world of global trade. Strip away the jargon and the deal's impact is clear for ordinary people. American shoppers will see higher prices on goods from Vietnam, from sneakers to smartphones. US exporters, farmers and manufacturers may see modest gains from new access to Vietnam's market, but these are limited. For some American workers, especially in import-dependent sectors, the deal could mean job uncertainty. In Vietnam, millions of factory jobs are secured, offering stability and a path out of poverty. The real test will be how consumers and businesses adapt. Will shoppers absorb price hikes, and can exporters seize new opportunities? The map of Pacific trade has been redrawn, and its true effects will play out in the daily lives of workers and shoppers on both sides of the ocean.